All right, guys, so we're going to do a little video lesson here on level 2. So what we're going to look at is, I'm just going to put up the 1-minute chart here, and we'll look at the level 2 on direct access software. This is the DAS Trader demo. This is where we're watching all of our students trading. And this right here is the level 2. I'm going to make this a little bit smaller. Let's see. So we're looking at PRAA, and this has some news out on it, and it's selling off. It just dropped 8 points in the last few minutes. So, you know, it's selling off with some serious volume. And now, the reason this is higher risk is because this particular stock has big spreads. When you look at the level 2, you see 46.98 on the bid, 47.25 on the ask. There's a 27-cent spread between the bid and the ask. And look at how quickly this is moving. 47.90 by 48. Okay, so the break over 48 there is important. That's this little flag breaking to the upside. And look at how quickly we just went from 48 to 49 to 50. You know, this is a lot of volatility here. And that's a nice bounce, but the risk is really high. So traders who got in this a little bit early, right under 48, and it dipped down here on this candle wick to 46.25, it dipped down almost 2 points. We can take trades without having to take really high levels of risk. So let's look at a trade.
Now saying that the FTC will be discussing mostly.
I'll turn that down. That's the Benzinga Pro Radio. So we'll look at a trade we took earlier on ATVI. This is a short here, shorting the first 1-minute candle to make a new high. Okay, so your stop is 37.80 and you're short at 37.66. So you're risking 14 cents. All right, you could take 2,000 shares and you're risking 300 bucks. All right. Now the profit potential on this, with 2,000 shares from 37.66, this came all the way down, really without giving you an exit indicator, to 37. So that's 1,200 bucks, based on a $300 risk, and then all the way here down to 36.50, 36.60, $2,000, based on a $300 risk. So that is a really good profit-loss ratio. You risk 300 to make 1,200. Right? Now when we flip back over here to PRAA, we're looking at a chart where you had to risk 2 points, right, to make, well, 2 points. It popped up 2 points. So if you took 1,000 shares, you're risking 2,000 to make 2,000. If you took 100 shares, you're risking $200 to make $200. So the risk-reward ratio just isn't really there. Now you could say, well, I wouldn't have let it go that far. I was going to keep a tighter stop. But then look at how quickly this moves. This moves very, very quickly. All right, so we're talking here just to start about the chart patterns. Okay, so looking at setups that offer 2-to-1 profit-loss ratios, that's really important with trading. The critical keys to success as a trader: number 1, risk management. Learning how to manage your risk on every single trade you take. Number 2, proper stock selection. This is a high-risk stock to trade. Wouldn't be great stock selection to take this trade versus one of the easier ones, right? And then you also need to understand chart patterns, finding the right entry. Now this is a decent entry here. It just happens that this is on a stock where the spreads are really brutal, where the slippage would be really bad, and where your risk is higher, okay? But this pattern itself is okay. And then lastly, you have to understand the nitty-gritty technicals of how to trade, and that means reading level 2. So the level 2 here, your typical stock is going to offer you a simple level 1. That's the bid and the ask. Every stock trades with a bid and an ask spread. So right now the bid is 49.03 and the ask is 49.42. Got a 40-cent spread. That's the bid and the ask. All right, you can buy on the bid, you can buy on the ask, you can sell on either side, or you can sell in the middle. Level 2 offers you more depth. It's also called market depth. it shows you how many shares are actually sitting on either side. Okay, so in this case, the 7 represents 700, and the 2 represents 200, the 10 represents 1,000. So when you've got this 1 here, that's 100 shares sitting on the bid. And then on the ask, you've got another 100 shares. Okay, so now we're getting a little more depth. We understand the current price of the bid and ask, but say you wanted to buy 10,000 shares, but you only see 1 share here, or 100 shares. There aren't enough people selling at that price to allow you to buy 1,000 shares or 10,000 shares. Okay, so by reading the market depth, we can get a better sense of the strength or weakness of the market in this particular name. I typically am going to look at this first level. This is the current price. Okay, so we've got 48.56, and you see 1, 2, 3 market makers are all sitting there offering shares to buy. Okay, so someone is a buyer sitting here. Now remember, the market is closed, and it's closed in the sense that when a stock does its IPO, its initial public offering, they release a fixed number of shares onto the market. So let's say, just for simplicity, they release 100 million shares. Okay, so every time you are buying, you're buying from someone who's selling, and every time you're selling to someone who's buying. We're just rotating shares within that 100 million share pool. Okay, so stocks that have a bigger pool of shares have a lot more trading activity, a lot more people are involved in the stock, and that means there's a tremendous amount of supply. So we'll look up here on our Trade Ideas information window. Let's see. We'll look at PRAA. This has a float of 47 million shares. That's how many shares are available to trade on the open market. 47 million. Sounds like a lot of shares. Let's look at Bank of America. 10 billion shares. And this is important. There's 10 billion shares of Bank of America. This is a huge level of supply. Bank of America is up 1% today. When you have a huge level of supply, it would take an equally large amount of demand to create large moves in the price of the stock. So stocks that have limited supply will move a lot faster than stocks that have really big supply. That's why we look at the lower float stocks. Now, the float is not relative to the price of the stock, because here's a $4 stock with a 600 million share float. So you can have high float stocks, heavy float stocks that are still low price, and you can have expensive stocks that have very low float. So the float and the price are not intertwined. They're not related. Okay, but what you will notice is that when you have a lot more supply, the spreads tighten up. So here we have a 30-cent spread. You know, that means if you want to get in this right away, you've got to buy on the ask. Okay, so you're going to buy 1,000 shares at 48.91. Okay, so you could buy that. And then as soon as you're in it, you're already down 30 cents, because if you wanted to sell, you've got to sell to a buyer on the bid. Right? They're down 30 cents. That's a $300 loss instantly. So usually a day trader doesn't want to trade stocks that have huge spreads, just because the risk is so much higher. As soon as you get in, you're down, 30 cents. It means it needs to go up, 60 cents on the ask, so you can sell for a 30-cent profit down on the bid. And of course you can try to sell on the ask, and you got to wait. If you're going to sell here, you have to wait for a buyer to come buy shares from you. Okay, so when you've got a low float stock, it's not uncommon to see bigger spreads. That's why I'm especially cautious of trading low float stocks that are high price, because they can be so volatile. A low price stock, a stock under $10 that also has a low float, a big spread maybe 5 cents or 8 cents, which is big, but it's much more manageable than a big spread on a $40 or $50 stock. Okay, so look here. When you look at the level 2, you've got the first level of market depth. Okay, so you've got the buyers here at 49.07, 49.10, 49.19, 18. All right, so who else is lined up here? Well, you've also got a buyer lined up at 49.10. That's the red bar. And you've got more buyers lined up at 49.02. And if somewhere in here you end up seeing a buyer that has a lot of size, like a 20 or 30,000 share buyer, that indicates some level of support. There's a large buyer there. He's putting in a bid and he's propping up the stock. Alternatively, on the ask, if you see a large seller somewhere down here, whether it's at 49 or 54, 56, 57, that could indicate someone that's holding the price down a little bit. And this is all information that you wouldn't have if you only look at level 1. You have to look at level 2 to get this market depth. Now, just a moment ago, we saw this drop from 48.90 down to 48.60, where it is now. And you saw there was a pretty big buyer there holding it up, right? But all these red sales went through. We'll scroll back here. They all went through at 48.90, 48.90. All these red sales were going through. That buyer got filled and the stock dropped. And it instantly dropped. Once that level of support was gone, it dropped very quickly down to 48.65. So learning to anticipate those types of moves can help you as an active day trader, because you can watch the level 2 and kind of learn to anticipate where you might get pops or where you might get quick drops. But remember also that we don't trade just on level 2. We wouldn't trade level 2 and not trade with a chart. You can't do that. You trade the chart first. You look at the price where you want to be buying. Say it's at $48 or at $50, wherever it is. You look at the price you want to buy on the chart based on the pattern, and then you look over at the level 2. You take a look at the spreads, right? Do we have a 10-cent spread or a 20-cent spread, or is it a tight spread? So the stocks that we were trading earlier, ATVI, you can take a look at that one. ATVI, this has a 1-cent spread. Look at the float. 335 million share float. Okay, so the float's a little heavier, but it's still moving quite a lot today. It's moving because it has a catalyst. So this is the right type of stock to trade. It's a stock with news that has a respectable float. The float's a little heavier than I usually like, but the news is strong enough. There's enough demand for this stock to really make a big move. And you can see that there's a lot of buyers and sellers. So if you want to take larger size, you could get in with 1,000 shares or 2,000 shares, because there's a lot of people selling and buying on both sides of the bid and ask. Okay, and this right here is, a fairly tight spread, a 1-cent spread. But the stock is still moving quickly. If we got in 1,000 shares, we were first looking, we're already, we've already seen $100 down and now back up. But then in contrast, PRAA right now is a 50-cent spread. How do you manage risk with a 50-cent spread? You have to have a very, very high level of confidence, because as soon as you get in, you're risking a lot. If you put out an order to buy, if you want to get in this, you can get in on the bid. All right, and you can just sit here on the bid and wait. You have to wait for a seller to come through and sell you shares. So when you see these orders going through, remember how I said this is a closed market, this is a pool. Right? We know we've got X number of shares, whether it's 100 million or 10 billion. So what we see here as being buys or sells, well, they're both at the same time. You're selling and someone's buying. What makes these red or green is whether the price takes place at the bid or at the ask. When it takes place on the ask, it's a sign of weakness. Someone is unloading shares right at the bid price. And when it takes place at the ask, someone is buying right at the ask price. So that's more bullish. That's what that red and green mean. And then the white is when transactions take place in between the spread. Okay, so anything in between the spread is just going to be white. So when we see red, we know that people are hitting the bid, they're bailing out. And you can see how quickly this drops. But look here, you've got a 10,000 share buyer at 48.25. So there's a little bit of support down there at 48.25. This is typically something I would look for. This indicates that someone is here holding this up a little bit. So, and look at that. Look at how quickly that got taken out. All right. So there's a 7,600 share order that went through. Someone sold 7,600 shares. Another person sold 2,000. and then the 25 was gone. And we dropped from there 50 cents. And of course, that type of drop is consistent with the level of volatility that you'll have on a stock of this price range that has a low float that's trading, with news. So when a stock sells off from $55 down to $45, you might think, well, geez, there's going to be a lot of opportunity here to profit. And on the one hand, there's certainly opportunity if you can capitalize on it, but it carries a lot more risk. And you have to think of every trade as being a certain level of risk. You're taking a risk every time you trade. So you want to minimize that risk. You want to take trades where you can really get the most profit with the least amount of risk. That way, even if you're wrong 5 times in a row, you're not going to destroy your account. You're just going to take small losses. But with this PRAA, it would be almost impossible to have small losses because of the spreads. So it is certainly hard to watch the level 2 when it's moving really fast. When I first get into a trade, the first thing I'm looking at is the chart pattern. Do I like the chart pattern? Do I like the stock? Can I manage my risk? Right? And that's just general. I know right away on this one it's going to be hard to manage risk because of how much it just dropped. But I try to get a sense of what the risk will be like. I look at the level 2, and then I can again do a little more risk analysis. What's the spread like? How thin or thick is the level 2? So this is a very thin level 2. You've got big spreads, and each level is separated by like 10 cents, 20 cents. So we've got 48.80, 48.86, 49, 49, 51.90. We've got a lot of big spreads in those levels, not just between the bid and ask, but between each level on either side. Whereas a thickly traded stock, like Sprint, for instance, you've got a ton of people sitting on both sides with a 1 cent spread, and it's so thick it's not even showing the next level because it's so tight. All right, so this is a very thick level 2. Something more in between would be probably ATVI, where it's fairly thick, and you can see, each level is 1 cent away. So you've got 29, 28, 25. They're pretty tight. I usually look for something that's kind of a happy medium. I would never day trade something like Sprint or Bank of America because they're just not going to move, right? We're day traders. We need stocks that are going to make big moves. But then on the other hand, a stock like PRAA is going to move so quickly and make such rapid moves that it's going to be really hard to manage risk. It'll whip around. Yeah, so this might trade in a tight spread momentarily, the way it is right here, but generally it's a thinly traded name. And as soon as that 58 is gone, you'll have 26 up. So, you'll be down 26 cents as soon as that 58's gone. Well, it's a little heavier on the ask side with 73, 75, 78. And I know when you're first looking at level 2, it seems like a lot to read. And that's why the first thing to study is not level 2. It's not the most important thing. The first thing is studying risk management, stock selection, and chart patterns, right? Learn how to recognize those bull flags. Like today we took a trade on AVXL, and this is a good example. AVXL, we were watching this long over 1440. Okay, so let me pull this back here. Okay, so right here we said we like this long over $14.40. So then, okay, the chart looks great. We've got consolidation, we've got 1, 2 tops, and we're coming up for a third tap. So we've got a little bit of a flat top level of resistance. Pretty simple. We look over at the level 2, and we saw, okay, at 1440, right here, there were 20,000 shares. So someone was sitting there trying to sell 20,000 shares at 1440. All right, so initially that person's kind of putting up a little bit of a wall. But then once you start to see the orders come through, and they're all going to be green, 2,000 shares, 5,000, 6,000, 8,000, all at 1440, right as that's about to break, I jumped in. And instantly we popped up to 1450. And again, there was another little wall there at 1450. We need buyers to come in and buy up all the shares that someone was selling. 1450 broke, and next thing you know, we were at 1475. And that right there was $500 profit in the daily goal. Trading a simple chart pattern, right? But also understanding the importance of level 2. So see right there, this is a good example. Again, the 25,000 shares sitting on the bid. You've got support there, and how quickly it broke from 1450 and just popped up. Not sure what this is doing here. So we're actually coming back up here to a double top on the daily, on the intraday. You've got a high of 1484. So when we see double tops, we know that these are typically not the best pattern to buy, because look at all this empty space here in the middle. Right? The safe place to enter this was like way down in this area, down at the bottom of this circle. Okay, now I'm not sure that I would have entered it down here at 2:30 in the afternoon, but you know, that would have been the safer place to get in. Now, okay, it's come back up, but we have this big W shape, down, up, down, and then back up. So what we need to see this do is consolidate. So we've got this double top, the U shape. Typically these pull back, and then we want to see consolidation right here. So this is going to be a cup, and this area here will be the handle. Once we have the handle, we'll have consolidation underneath this 1475 level, and then we'll be looking at the level 2, 1475, for the breakout. And what may happen is we look at 1475, and lo and behold, there's a 20,000 share seller. Someone is sitting there heavy at 1475, because that is a critical resistance level, and it's not going to break easily. When we see that big seller on the level 2, it confirms what we suspect, that this is an important place on the chart. Other people recognize it too, right? It's not just us. So that's what I would look for. Whether or not that happens on this particular name, you know, at this time in the afternoon, I'm not sure. It may just come up here, double top, and sell off. A lot of people do like to short double tops with a stop right over this level, simply because of the fact that it is extended from this move down here from 1240. It just made a big pop up. Okay, so now the software we're looking at here is DAS Trader Pro. So what we have, we've got the bid on the left, the ask on the right. You see we've got a short, a cancel, replace, and a buy key. All right, so if we want to get in this, I would click on the ask. That'll change the price to the current ask price, and then I can just press buy. Alternatively, I can go down here and use a market order, or I could route directly to one of these market makers. This is called direct access routing, when you route directly to a market maker. So this right here is kind of like a little island, right? And traders from all around the world are coming to meet right here, and this is the current bid and ask. But you can come into this island from 1,000 different directions, and those different directions would be NASDAQ, ARCA, EdgeX, BATS, BYX, Knight, right? These are all different routes into the island, okay? But they're all going to land at the same place, and we're looking at the same price. This is where we all come together. And the great thing about trading online is that we're all trading on the same level playing field, because we're all meeting at the same price. Okay, so you can choose which route you'll use, because some will be a little faster than others, right? So some will match you up with a buyer a little quicker than others. And that's why I like to use direct access routing. Some of the full service brokers that you know, are out there, some of the really big names, they don't offer direct access routing. They just offer limit or market orders. The problem with that is the routing is usually a little bit slower. So a direct access broker like Speed Trader, which uses DAS Trader Pro as the platform, is a really good place to trade. Okay, so you choose your route. We'll say we'll use ARCA limit. Long, 1,000 shares, 1449. All you got to do is press the buy button, and you're in. You cancel, and then once you're in, this will change from saying short to saying sell. It'll give you the option to sell those shares back on the market. Now you can, of course, sell up here on the ask. You could be a seller up here at 1449, but you'll have to wait for someone to come and buy the shares from you. Okay? Every time shares are sold, there's a buyer. So right here, you've already got someone saying they're willing to buy 100 shares a 1435. So if you don't want to wait at 1449, you can just hit the bid. Press that, 1435, click the sell button, and you're out. Right? But this is all part of level 2. You wouldn't be able to see any of this when you're looking just at level 1. Level 1 looks more like that. Okay, that's all you see. But that leaves you almost blindfolded. You can't see the depth of the market. Right? You don't know, well, who's below 1437? Is there someone sitting at 1436 with 100,000 shares providing a ton of support? Or is there nobody until 14? And who's above 1447? Right? Is there someone right above there providing, creating resistance, or is there nothing until 15? So that's when we start to need to look a little bit deeper. See, okay, there's someone at 1425, and someone at 1455. Or there's 2 buyers here at 1431, when there's only one at 1440 that's selling. This helps us understand the market a little bit better. When I started trading, I didn't know anything about level 2. All I knew was level 1. When I logged into my, regular old E-Trade account, you would just see, this kind of thing. Okay, well, I can buy at 1437 and just type in 1,000 shares and you click buy. And you got to click refresh a couple times and it comes back up and shows the new price. And then you click sell, right? But that's not feasible for day trading. It's really not going to work. You need to be able to see everything else that's going on. Okay, so this window here is called the market depth, the level 2. And then this window is the time and sales. These are each order going through in real time. The price, the number of shares, and then the exchange. Right? This was the route used to get to this place right here. ARCA, EDGX, FADF, etc. Now, some traders, instead of having to click here and type here to buy, they'll use hotkeys. Now, the advantage of hotkeys is that you can go up here into your windows. Where is it? Let's see. Oops, that's what. Okay, so we've got all these hotkeys. So what you can do is you can go into the hotkey configuration and you can map specific keys to do specific things in this window right here. So you can create a key to buy 1,000 shares at the ask price, or to sell 1,000 shares at the bid price. Or you could create a hotkey to put out an automatic stop 20 cents away. So if the stock drops 20 cents, it'll sell your position for a loss. So it won't just keep going down. You can create hotkeys to change which route you'll use down here. How many shares you want to buy. How many cents above the ask you want to put this to give you a little extra room to get filled. Right? Because at this moment here, we can see there's 600 shares. The 5 plus the 1 is 600. Okay, so say you want to buy 1,000, maybe you get filled 600 at 35, and then it pops up to 1440. Right? So by putting this up to 1442 or something like that, we ensure we'll get the first 600, and then also leave room to fill the rest, maybe a little bit higher.